Bullion Finance News, Emergency Market Update. Welcome to Bullion Finance News. This is truly an emergency broadcast. What you were witnessing on the charts this morning is in T, trading or economics, at ES, professional manipulation. It's a coordinated takedown of the precious metals market. It's Thursday, January 30th, 2025, and if you checked silver prices this morning, you probably thought your data feed was broken. Silver dropped $15 an hour. Gold crashed $500 in a single session. The mainstream press calls this profit-taking or a correction. That's nonsense. Profit-taking doesn't crash a market 15% in 20 minutes at 8:30 a.m. New York time. This was a coordinated algorithmic strike designed to break your psychology. The smoking gun, market decoupling. Here's the evidence proving this market is rigged. We are witnessing something I've never seen in 20 years, a complete decoupling between US and global gold prices. Right now in New York, the paper price of gold sits at 2,422 pesos, but simultaneously, London is trading at $2,558 and Mumbai at $2,559. That's a 300 plus spread for the exact same asset. In a free market, this is impossible. Arbitrage bots would snap this up in milliseconds, buying cheap New York gold and selling in London until prices match. But today, the bots are turned off. The gap remains wide open. What this tells us, this isn't a global sell-off. India isn't selling, China isn't selling, Europe isn't selling, only New York is selling. This is a localized, targeted attack on the COMEX paper price, a naked short flood. The entities controlling the US dollar are terrified. They saw the dollar index collapsing and decided to sacrifice the COMEX to save the regime. They dumped billions in paper contracts during the New York session to artificially crush prices, hoping to scare you into selling your real metal. They're gaslighting you. The $18 silver price on your screen is a lie existing only in manipulated computer servers. It doesn't exist in Dubai's markets, India's jewelry districts, or China's factories. The China reality. While New York shows $18 silver, China tells a different story. Rongtong Gold, China's largest precious metals buyback network, is offering 29,590 yuan per kilogram, translating to 132.42 per ounce. That's a 24.42 premium over New York's $108 price, a 22% difference. Why? Because China is experiencing a supply crisis. Shenzhen S Manufacturing Hub has an OQT received silver from the Shanghai Gold Exchange in 15 consecutive days. Factories building electronics, solar panels, and batteries sit idle. When a factory owner realizes he might default on contracts, he doesn't care about COMEX prices. He'll pay $130, $140, whatever it takes. This creates the ultimate arbitrage. Buy paper in New York for $100, the short trap. Here's what's bizarre. Despite this 15% crash, nobody's shorting. The fee to borrow SLV shares is just 0.53%, basically free. Over 10 million shares sit available. Hedge funds refuse to bet against silver because they see the 130 China price, and no shorting at 108 is like standing in front of a freight train. Even JP Morgan, while their trading desk smashes prices, has their lead strategist calling for gold to reach $8,500 per ounce, a 63% upside from current levels. The verdict: you have three realities today. Reality 1, New York's $18 silver, the manipulated price. Reality 2, London, Mumbai's 118, the fair global value. Reality 3, China's 132, the desperation price. Millions of Western investors are panic selling based on Reality 1. Who's buying? Reality 3, Chinese buyers scooping up discounted metal. Don't let a red candle in New York shake you out of the green reality globally. If JP Morgan thinks gold's going to $8,500, why sell at $5,200? If China pays $132 for silver, why sell at 108? This is Bullion Finance News. The game is rigged. The spread is real. Don't sell your wealth to China at a discount. Stay strong.